Getting married or going through a divorce in Wisconsin? Here's something people don't realize. Your spouse can impact your mortgage approval without ever being on the loan. If you're getting divorced, signing paperwork in court doesn't automatically remove your name from the mortgage either. Today, I'm breaking down what actually happens, Wisconsin specific, no confusion, no noise, so you know exactly where you stand.
It's the Mortgage 101 podcast where real talk meets home and life.
Hey folks, welcome to Manley's Mortgage Minutes. I'm Manley Haynes, and every week I help you cut through the confusion around mortgages, housing, and what's really happening here in Wisconsin so you can move forward with confidence. Today, we're tackling a topic that comes up more than you'd think: marriage, divorce, and your mortgage. Because life changes happen, and when they do, understanding how they affect your financing can save you stress, surprises, and costly mistakes down the road. Let's jump in. First, what happens to your mortgage when you get married? The good news, if you already own a home and have a mortgage before getting married, nothing automatically changes. The loan stays exactly as it is. Your interest rate doesn't change, your payment doesn't change, your loan terms don't suddenly shift because you said, I do. If the mortgage was in your name before marriage, it stays in your name. Where things do change is when you apply for something new. Maybe you're buying a house together, maybe you're refinancing, maybe you're upgrading your homes. That's where your financial picture starts getting looked at differently. And here in Wisconsin, there's an important wrinkle people don't always know about. Wisconsin follows the Wisconsin Marital Property Act, which means certain mortgage rules work differently here than in many other states. For government-backed loans like FHA, VA, and USDA, lenders may have considered debts belonging to other non-borrowing spouses, even if that spouse isn't even applying for the loan. Let me make that practical. Let's say you qualify on your own. You've got solid income, good credit, and you're applying solo. But your spouse has monthly debt obligations. In some cases, those obligations still get factored into your qualifying, and that can impact your buying power, monthly affordability, and even program eligibility. That doesn't mean you can't buy, it just means strategy matters. This is why getting educated before you start shopping matters so much, because small details can change outcomes. And here's another Wisconsin-specific item many people never hear about. Even when a spouse isn't on the loan, they may still need to sign mortgage-related documents. Not because they're responsible for making mortgage payments. They're not, because Wisconsin law recognizes marital property interest tied to the home. Translation: build a little extra time into the process, and don't panic if your lender says your spouse needs to sign the paperwork. That's normal here. Now let's talk divorce. This is the part where confusion causes real problems. If both spouses are on the mortgage, both people remain legally responsible for the payment even after the divorce is filed. And this is important. A divorce decree itself does not remove someone from the mortgage. Neither does a quitclaim deed. I see this misunderstood all the time. Someone signs over the ownership rights to their home and thinks, okay, I'm done. But from the lender's perspective, not necessarily. Here's the difference. A quitclaim deed changes ownership of the property. The mortgage is a completely separate agreement. If your name is still on the loan, you're still tied to that debt. That means missed payments can still affect your credit. The mortgage may still count against you when qualifying for another loan. And financially, you may still be carrying risk that you thought was gone. So what actually removes someone from the mortgage? There's really two clear paths. Option 1, refinance. The spouse keeping the house refinances into their own name and qualifies independently. The old mortgage gets paid off and replaced. Now responsibility belongs to one borrower. Option 2, sell the home. The property sells, the mortgage gets paid off at closing, and both parties move on cleanly. Simple. Not always emotionally easy, but financially clear. And if I can give you one piece of practical advice here, don't wait until after the divorce to finally figure this out. Have the mortgage conversation early. Know what's realistic. Know who qualifies and know what options are actually out there before the decisions are permanent. So here's the bottom line. In Wisconsin, marriage can affect mortgage qualification even when your spouse isn't on the loan. And during divorce, paperwork through the court system does not automatically remove you from mortgage responsibility. A refinance or a sale is what actually resolves it. The good news is, when you understand the rules and you can plan for them and move forward with confidence instead of confusion. Thanks for joining me on this week's Manley's Mortgage Minutes. If you're navigating a marriage, divorce, or a major life transition and you want clarity around your mortgage options, let's talk. Schedule a quick strategy conversation and we'll walk through your situation together so you know exactly what your next best steps look like. And if you want more real talk around mortgages, market trends, and home ownership strategies? Check out the Mortgage 101 podcast. Every week, Anthony and I break down what's happening in the market in plain English. I'm Manley Haynes. I'll see you next week.